Hey, today I want to go real shallow on a topic. The solo 401k, a great option for somebody who's a solo owner of a business who wants to reduce their current tax liability. This is a great way to do it at a large amount, and this is how it works. So let's just assume $150,000. That's how much you're grossing net right now, and you're paying taxes on that amount. You want to lower that. You're not worried about having all this cash in your account. You're more worried about saving for wealth building, saving for retirement. And ultimately, what we can do with that, if we're going to use the 401k again, is reduce that tax liability in doing so. So if we have the $150,000, what would usually happen if you work as a W-2 employee in a business? You work for somebody, you're going to get the employee side, and you're going to get the, in 2025, I think the contribution max is $24,000. So what you'd be allowed to do is contribute $24,000 to your plan, and that's going to reduce your taxable income to $126,000. Now, in that tax bracket, if you're making that much money, you're going to be saving quite a bit. At least 22% if you're married, filing jointly, maybe more if you're single. But again, that's a big deduction. We're talking about many thousands of dollars extra saved here. Now, the solo 401k, the big benefit. This guy here, what can you do additional that you can't do when you're an employee of a business? Well, guess what? You're also the employer. So whereas the employer usually would contribute, in a plan, they'll have a match, 3%, 4%, that will go into those 401k contributions you make. You're the employer now. You also get a $24,000 limit that we can come and slide down here. Boom, 24K, we're going to simplify it. And now, we're down to $102,000 in taxable income. That's the big change, and what have we done really effectively? We've opened our solo 401k plan. We've put $48,000 in there to grow and be withdrawn in retirement. But ultimately, what that $48,000 has done is reduced our taxable income by $48,000. Meaning, again, if I just use 20% savings rate, we're talking $10,000 in tax savings right there. So again, if this fits in your plan, if you're looking for ways to save on taxes and put that money to work in a different way, a great option for someone who is a solo owner of a business. The details of this, important to make sure you know how they work, just so things are set up properly, but once you get in, it's not too difficult. You can do this. There's actually more you can contribute if you have a wife or spouse involved in the business, but let's keep it simple. What you get is the ability to contribute to these two buckets, save a whole lot of money in taxes, get your investment plan growing in the right direction.